Hey guys, so as promised, I will do a YouTube video on the things that you have voted for. So I'm looking to do a few more of these, let you guys vote on what stocks you want. If you're not part of this group, ASX Share Trading for Beginners, make sure you join. I'll put the link in the description for you to join. I often post a lot of charts and there. A lot of these ones that have been talked about, I've actually posted about, like Woodside, DYL, things like that, SVO as well. So I'm going to go through and the top 10 favorite, I'll go through, and then I'll also point out a couple of other little ones that I'm looking at right now as well. All right, so first of all, Woodside was one of our popular ones. Let's check out Woody. And this was one that I posted about at $27. And the reason why I was looking at that level is this. I always look for points of confluency, which is where the word confluency means multiple rivers meeting at one point, and the term works in trading as well. It's where multiple buy signals all appear at one area as well. So what we're looking for here is you can see this was where we bottomed, and you can see we've got a trend line, which is very basic TA stuff, as in following higher, low, move up, and we're bouncing off that level there. Okay, so that was one reason why it could bounce there. Another reason on top of that is the fact that if you bring that across as well, you can see it's a major support level. Okay, so this here is the bottom of the GFC. So GFC, bottom, and then we're here again now. So, you know, where you're pretty much getting Woodside at the same level you could have bought it back at the bottom of the GFC. Now, on top of that, we're also going to get our Fibonacci retracement level. So let's go here, and you can see from here as well, we're also sitting on the Fib 500. Okay, so now I've got three reasons why people would buy here. I've got a trend line, I've got a horizontal support, and I've got a Fib 500. Okay, multiple reasons why I was even looking at it. Now we're going to dive in. That's the weekly. So this is why on that chart, you'll notice I had a little circle there going on mine off this level. Okay, now I'm going to zoom in and show you a bit more data on that one. So now on that, coming down this level, you're looking for potential reversal patterns. And what you can see here is you can see a nice little falling wedge, or what's called a possible end in diagonal. Okay, so end in diagonal, which is the end, a possible end of a move. So we've got a possible falling wedge, which is a reversal pattern going into the moment there. Then what I like to do is I like to look for they're things that I call blinkers. Okay, so when you're out driving on the road, cars put on blinkers when they're turning left, right, etc. The market will do the same thing. Okay, so before they turn around, it'll often put its blinkers on. So what I've done is pulled up here, and you can see from those lows here, so from that low to that low, you can see we have what's called bullish divergence. So what we have is a higher low in RSI, but a lower low in price action. Okay, well, actually that's a double bottom. Yeah, sorry, double bottom in RSI, but a lower low in thing, which is what's called bullish divergence. On top of that, we also had bullish divergence on our volume as well, showing that volume does not support the move. So same thing, double bottom in OBV to a lower low. So I've got double blinkers on, which is what I like to look for. So not only do I have a reversal pattern going into a major confluency point, I've also got my blinkers on from the market telling me that, dude, I'm weakening here, I'm about to turn around. And that's what I like to look for. Then after that, what I look for is a change of structure once we get down there. So then now if we start to unpack this one, you can see we also have a falling wedge coming in on this pattern here as well. Okay, falling wedge, and now we've broken up. Okay, so buyers have really stepped in here. What I'm looking for now, I'm just going to get rid of everything and show you from scratch. I'm going to zoom back out. So right now, this was your last high, and we are rejecting the 618, which is a common rejection zone. Okay, so how the market works is that they zig and zag, and they zag, and it could continue the downtrend here. This is where it could reject anywhere in this $28.50 to $30 kind of zone, and right now it is rejecting where it should do. However, this is also where they could start to step in and buy right now. Particularly, there's a good chance it could be bottoming right now. So I'm going to zoom in and show you. So one, it's still off the 382 there, but then on top of that, I'm going to zoom in on here. So from this last move up now, you can see we're on the Fib 382 right now, okay, which also happens to be old resistance, that's support. Okay, now we're going to zoom in even more. And you can see on this level, again, confluency level, I'm looking and I can see we were coming down and I can see I've got a double bottom reversal pattern right here. Okay, so neckline come up and we've broken the decline resistance. Okay, so we were going down, we've put in a reversal pattern. Okay, so right now, yes, this could just be another zag and we come up and we just reject anywhere in this zone here. Okay, however, if we get through this 2880 here, things start to look good because then it's likely not just a zag and going to continue, we've probably actually got maybe a possible major bottom. Okay, on top of that, I'm going to see where their blinkers on coming down. And you can see here, yep, we had higher low. Okay, so weakening in the trend as well. So good, we had our blinker on coming down as well, which is what I like to look for. So if we get through that 2880 here, that is why things look good. And the reason why is because right here, you can also see that was a major support. Okay, buyers, 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 buyers. So you can see a lot of buyers have stepped in here around this 2870 zone. So if we start to get through here, that's telling you that all these buyers have already exited or they're happy to hold. Okay, which means that this was just a liquidity grab and likely we've got a bottom. Okay, so I'm got to be careful of a rejection here because old support aligned with the Fib 500. Anyone that bought here might want to just exit. But if we start to do something like this and get through here, you beauty, all of a sudden, we're not just correcting that move and we're likely have just had a zig and a zag down to our Fib and we can continue the trend. Okay, if we were to take out that zone, then we could start to come down to other key lines, something like down around this 2500, you can see old resistance will become support, or, you know, it may even come down and fill this gap. Okay, until we actually get a change of structure, we don't know that we've actually bottomed here and starting to go up yet. So at the moment on the smaller time frame, we are in a downtrend, but if we start to get some kind of reverse and come up here, then things will be looking good there. So that's Woodside, still looking good from that $27. He's still up a good 5% since then. And it's still a major level. If we don't hold that 27, that's where then you'd be coming down to the next key level, which is down around this $24 zone. So I'd be looking down around this level, which again is a major support resistance, the Fib 618 kind of level down there. So hopefully it holds here. If it doesn't, I would be looking for life around here. Top of that, if you look at how it actually works, you're probably thinking, man, Woodside's been a bit of a shitty stock to own since the lows here, because you can just see since the GFC, it's been in a downtrend. If we actually now adjust that to dividends adjusted, you can actually see that it's broken out of its sideways range. Okay, so we had a big pump, we've had our sideways, and all it's actually doing right now is coming back and testing old resistance as support right now as well. So with actually dividends adjusted, we've actually taken out a new high, and now we're coming back to test it. And again, start to look at some of our key levels. We are down in the Fib 382 on that one. So another point of confluency to look for life off here as well. Okay, so it's always important to look at things like that as well, because something, especially like Woodside, pays a very, very decent dividend. It's one of the reasons I'm looking at it, to add it into my dividend portfolio, which I did today, because I was able to get that entry on the double bottom off here. Okay, so nice tight stop. If we start to break below, I'll start to look down around a little bit lower. Okay, but little things like that are important to look at. All right, let's look at the next one, which is DYL. Let's check that one out. Okay, so DYL, it's important to always look at market structure first. And as you can see, we're in a clear uptrend. Higher high, higher low, higher high, higher low, higher high. But from this recent low down here, which is where I put up a post about it as a buy, was back down here. Okay, so old support broke through. Whenever support is broken, it's for one of two reasons: to continue the trend down or to grab liquidity. And in this case, when it came down, it was to grab liquidity. And whenever it comes back in and changes structure back, that's always a good sign. Okay, so that's where I was able to get it down there. And from that point, what we have had is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. This thing is 100% still bullish. Okay, as long as the sellers are selling higher, 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 and the buyers are buying higher, it is in an uptrend. Okay, that is 100% bullish. Even if we do get some form of retracement, all it has to do is anywhere within this box here. Sorry, I've rotated that the wrong way. I've done the wrong one. Okay, anywhere within this zone here is a potential bottom. Okay, could have bottomed right now. It could keep coming down, or even here at $1. So while it's above $1, it's 100% bullish and absolutely nothing to worry about. Okay, and it's particularly still very bullish in the fact that it's still 100% in market structure. Okay, and you know, right now you're at a pretty big confluence zone, and the fact that resistance, support is holding, so it's extremely bullish while above $1.30. But technically, while it's above this zone here, $1, it's 100% bullish. Okay, so nothing to worry about while above there. If we ever broke below that $1, then I would start to worry a bit more. Okay, because then again, as you can see, we're still in an uptrend as well. So very similar to Woodside as well. Still in an uptrend. Still got, you know, there's going to be a lot of buys that are going to step in around this area here. So I'll be surprised if we don't get some form of bounce around here. And then only if it bounced and then went like that, then you would start to worry in the fact that you've changed weekly market structure, you've bounced off that level and created a lower high. Till then, there is absolutely nothing to worry about. There's a lot of people that are probably a bit annoyed because when did most people come into it? Here. Okay, they came in this year, and for the last 6 months, it's been range bound doing nothing. When did I buy it? Here. Me, I don't care at all. I'm still up 300. I've tripled my money still. Okay, but majority of people in the excess phase, that's how it works. 1, 2, 3, 4, 5, excess, A, B, C. So likely to get some form of bottom either here if it's a running flat, or down here if we get an expanded flat. Okay, so keep an eye out. But to me, all this looks like is that we had our moves up. You can see we had bearish divergence off the 3rd and the 5th there. Okay, 3rd and 5th. That's the excess phase, A, B, C. Okay, so to me, all it's doing is just doing a flat correction right now. But again, like I said, if we break below $1, then we're likely not. Okay, but extremely bullish while here, bullish while above $1. Okay, next one, FMG. Okay, so looking at this one, I can see where I would have 100% gotten out if I was in it here. And the reason why, when we took out the high, resistance, took out the high, and then you can see we've changed market structure back within. Exactly the opposite to what I just showed you in DYO when it broke the support. Okay, so that there existed because it was a liquidity grab. Multiple chances to get out there, and then it came up and did it again, and then you had a chance to get out there, which again was resistance becoming support. Okay, so selling became buying, and changed market structure. So this is one that I wouldn't be in at all right now because the trend is down, and the fact that we took out a high and that coming back in worries me. So what I personally believe is happening is this thing is still range bound. Okay, I think that it's range bound, and looking at this, it's moved in 3 waves as well. So I think you're still going to be correction, and then we're still waiting for it. So for me, I'm not interested in this one at all unless you're a dividend kind of person, knowing that you don't care if it goes anywhere between that 14 and 28, and you just happy to get your dividends right now. The only thing I would talk about is iron ore, which right now is also in a downtrend, selling lower. However, we are at a level that interests me in the fact that it could go either way from here. So we are either going to zigzag level and we bounce up. So once we break 120, then we've got to change the structure. However, we've gone zig and zag and reject them, and we could also continue down. So if we break 105, then actually we could keep coming down here as well. So until iron ore makes up its mind, I wouldn't be touching FMG. If we break 120, you beauty. That's gone bullish market structure and things are looking good. But at the moment, we're rejecting this zag, and we were buying off here, but now we're rejected old resistance, that support, which also happened to be the fib 618. I bet you. Yep, that's 618. Let me just get rid of that so you can see it. So coming off here, 618, just like I showed you with the other one. So at the moment, that's just rejecting where it's supposed to reject, and it's fallen out of the zag zone, which I don't like. So there's more chance of downside than upside right now on FMG until we clear that. If we were to roll up here and clear 114, good first sign. The fact that support is resistance, that means that it's gone. Change of market structure there. But then again, above 120. So that FMG doesn't interest me yet, in the fact that both iron ore and it are still in a downtrend. Until they tell me they're out of it, I'm not touching. Okay, next one, SVL, good one. So SVL is a really good one because this has been a test, and this is what I've been talking about with MTM students here, and the fact that, to me, this looks very much like an expanded flap, which is where you've come up, and then what you do is you take out the highs, you take out the lows, and then you could go. So what I was looking for was for it to get back through this level. See how it's a major support, and we have. So that's a good first sign. So long as we stay above that level now, so stay above 16 cents, things are looking very good. If you want to know what I'm talking about, I'll show you an example on Bitcoin. It's called the liquidity grabber because it gets all the longs out and then all the shorts out. So this kind of thing right here, where you take out the high, take out the low, and then you charge up. Okay, take out the high, take out the low, then you charge up. So that's what I think is happening. We're here right now. But as you can see here, that means that we cannot take out that low at 15 cents and ideally not back below that 16 cents. Here's another example of it here. Okay, take out the high, take out the low. So we're hopefully here, it's starting to come up. So that's what I'm looking at here, in the fact that we've done that. But yeah, got to stay above that 16 cents. And then if we get above there, U beauty, zig, ABC, boom, and we take off into wave 3. Okay, so, but like I said, bullish well above 16, has to stay above 15. All right, next one, SVR age, PDN, probably just a similar thing to Thingo as well, PDN. All right, so same kind of thing here. We've broken the trend line. However, from that, you can see what have we come down to? We're just down at our fib retracement zone right now. So anything from that $10 to $13 is where buyers are supposed to step in. There hasn't been a reversal. That is not a reversal. That's just a zig right now. So in order for this to be a reversal, what it would have to do is come up to this zone, reject, and then fall away. Then you get a reversal. Okay, but it could still bottom here at this $10 zone. It could go zigzag there and then keep going. Okay, but that is where we change market structure. But while above $10, we're still extremely bullish. If we start to break below that $10, then I get worried, because if you start to look left, what have we got? That is where old resistance should be support. So it should not get back below $10. That would actually just be a healthy retracement. Again, you got to remember these things. Again, I got this thing right here. If you watched my YouTube video on it last time, literally bought that low right there on the Nambia FUD that came out. From there, it's gone from $5 up to $70. It more than tripled in a matter of a year. You know, things aren't supposed to move that quick. So for every zig, you're going to get a zag. Okay, so again, if you're worrying and you're freaking out, it's because you bought in the excess phase when everyone was talking about that's an ending diagonal. Okay, you were supposed to get some form of retracement. Okay, so again, this is what it does. It chills, gets everyone bored, forgetting about it before it takes off again. Okay, depends on your outlook. I've got no uranium in my trading account, and I said that when I exited back. Oh, I can't remember the post. I think it wasn't even that high. I think it was this high, because I'll show you on uranium. We had hit my target. Yeah, it was back on this post here. Here. So again, what I believe is happening is we topped and we go A, B, C and we go, or A, B, C and we can go as well. Okay, but again, let's look at the big picture on this stuff. Look at the 3 monthly. This thing is still Okay, still 100% bullish market structure. 3 months, let's look at the monthly. Okay, what it's showing you, resistance is becoming support. That's good. Anything above $26 is fine. It can come down here and still be completely fine. This is all just after a big run, you chill for a bit before next move. Okay, worst case scenario is that this is your move and you go A, B, and you get kind of C, or worse is you get some kind of expanded flat as well. Okay, but while above here, extremely bullish. If we break that, then yes, we're looking for some kind of zag zone into here. But on the bigger time frame in my long term, I'm not worried whatsoever. I know that's an impulse there. That's 5 waves up, and I know that either that's the end of the correction or this will be a correction. I'm not worried in the slightest in my long term account. Okay, next one. All right, LYC, good one. So I bought this one just recently, and I'll show you why. Okay, again, very similar to what happened with DYL and stuff like that. All right, so this was its major support that broke. So I'll buying, became selling, and now we're buying here again. So then I look at that and go, possible liquidity grab. However, at the moment, we are still from that to lower. So I need it to break there. If it does that, we're going to be breaking out of this channel. Where's a parallel channel? Okay, so then we're going to be breaking out of there. And again, I'll start to get some confluency. You can see that's a big level. Okay, so if we bounce off here and break this level, so $7, we get a change of market structure. If we get through 783, I then look at that and go, all these buyers are happy to hold. They've only had one exit, and that means the rest are happy to hold. Okay, so, you know, something like that. And then if we get above here, $9.30, then there's literally no trap money left. They're all just selling. They're all just sellers. There's no trap money. So once we get above 930, you'll be likely to take out the high. Again, this looks very impulsive to me, and that we're ready, or all it's done is zig and we're zagging, which again is down at our fib retracement level, which you can see is a healthy move. Okay, so anywhere in here is where it's supposed to come down to. Now we just need to see the buyers step in, and at the moment they are. I'm getting bullish divergence. I'm getting bullish divergence lower in volume. So again, it has its blinkers on in the zone where it's supposed to, and it's where. So I've got an entry here at $5.90. Once we broke up through that level, I saw the accumulation happening on that zone, but I'm still watching because I needed to get above here until we get our reversal pattern. Okay, once we break that 710, things look much better. 750, things look really good. Above that level up here, things are extremely good. Okay, from there, let's look at CXO. Okay, so CXO, I actually was looking at the other day. So I've taken an entry just recently, and I'll show you why. So you can see here the daily. So I'll show you what I did. I was looking at the hourly, and we had a change of market structure. Okay, so I got in on the change of market structure and put a stop below the stop loss. So we're good right now. Right now, what it's done is it's come down, filled that gap, you beauty, and now we look like, so if we can come up here, then all of a sudden this isn't a 3-wave move, and it's an up, A, B, C, running flat, took out the high, come down the zone, and then we're going much higher, and then it could still reject here in 11.5 to 13.5. If we get through that 13.5, again, look left, buys. That means if we get through that 13.5, 14 cents, then we're not just correcting that move, that we are likely correcting a much larger move, and we're going to get a big move. Okay, so I took that change of structure because I had my blinkers on, bullish divergence. Volume started to support the move on the way up, not on the way down. You know, border fast zag zone, which is common here. Okay, border fast 618 here, and now moving up. So at the moment, looking all right still. Yeah, and like I said, I'm on it, and we'll see how things. But my stop is literally right below there, so nice tight stop. And yeah, there could be a decent bottom here on CXO for at least, I don't know if it's a bottom, but it's at least going to be a decent trade. So that's CXO right there. Next one, South 32, another good one. Okay, so this is, I'm just going to hide my indicators for now. So this is one that, as you guys know, I've posted about 1 million times. I bought down here at bought right there on that 288. Had a phenomenal run. I took profits, not there, 294, but I've only taken half off the table. So I was up 30 or 40%, took money off the table, and now I'll, pretty confident that a move was going to come back in. So from there, again, why? Because it come up to the zag zone. Okay, 618. And it was starting to show weakness on the small time frames, and old support is going to become selling. Okay, took the trade. Right now, though, it can easily just have a nice, healthy retracement. Okay, we haven't even actually come down to the level off that move. However, it could just be retracing this move here, which is actually a strong possibility. The fact that we just actually come down to the fib 382. Okay, so it may have bottomed right here, right now. And this is your wave 1, expanded leading diagonal, 2, and then this is wave 3, this is wave 4, and then we can go for a 5th wave before a bigger correction. But yeah, it's if it holds this level here. However, if it doesn't hold that level it starts, then it could start to come down and test some other levels down here. So if we are retracing the whole move, then it could easily come down this 382 here, which you can see aligns with this major level here, which was the level I was excited about first breaking. Again, look left. Okay, buyers became sellers, so they should become buyers again. So I'm not worried where it is. I'm pretty darn confident it's going to get bought up in this zone here. If not, it's already bottomed here as well, which was my first target. Okay, so from there, we could then get another move up, and then again, you'd be looking for some form of confluency. Coming back, you're probably going to come up to the around this 450 zone, which again happens to align with major support resistance level. Okay, so if we do bottom here, we go up, your next level is around this 440 zone. Once we clear that 440 zone, you'll notice that again, there's only going to be sellers left, no buyers, one buyer. They're all out. So once we clear 450, likely a major bottom. Okay. Reason again why I was even looking at South 32 in the first place as well down here is one, it was down at again major support key levels, but on top of that, South 32 is a spin-off off BHP as well. And if you start to look at where it was actually historically undervalued compared to its big brother. Okay, so you can see here, this is when I bought it down here, and you can see that was an historical bottom in its ratio against its big brother. So it was historically cheap compared to BHP. It was showing big signals at a major level. Boom, again, got the signals coming down to that level as well. Bullish divergence. So then once we changed our market structure, you beauty, we're in, we are outperforming. And I think it will still continue to outperform as well. So this one should keep going, and until we start to get back up above this level, and then it will become historically expensive compared to BHP again. And then that's where you might look to book some longer term profits as well. But yeah, that was a beauty on that one. Still very happy with that one, and still got a Red 5, another one that has been an absolute ripper for me as well. As you guys know, I posted about this one back here, and again, again, these are textbook setup guys that if you master them, you make fortunes. So just again, check out same thing as DYL. Okay, major support that broke, and then change market structure to come back. broke the decline. Okay, so then you look at liquidity grab. Why does that exist? If you break support, it's to continue the trend or grab liquidity. So if you ever break it, come back in, change market structure, you've got divergences on it. Volume coming in, bullish divergence, didn't take out the low in volume, but it did in price. Bullish divergence, you know, major. I got this thing at 16.5 cents. It's now up at 40. It's nearly tripled, and just been an absolute ripper. Even now, we're going to likely continue the trend. You've got hidden bullish divergence from this low, continuation of the trend, been coming down in lowish volume. So it should still continue the trend, still in a beautiful uptrend. It's going to be breaking out of a massive sideways range back from 2019, and then actually then bring out its next impulse as well. I still got, even though I'm up triple, I'm still not selling. Still very bullish on this. Still think it's got major upside, volume confirming the move, hidden bullish divergence. It's reset the RSI, I have plenty of room to go up. Still very, very good. Okay. Leave it there because we've been speaking for half an hour. But I just wanted to show you some key ones there. For hopefully that helped, guys. And if there's any other ones that you're keen on, let us know. And I'll try and get one of these done each week, just to try and help out those that are in positions and knowing where they could still be going. But it's good to see a lot of the ones you guys have been voting for are looking good. There aren't many. That only one that's looking a bit shady is FMG, and it could turn here, but I need more data to know it's turning. Okay, so until iron ore and FMG start to turn around and change market structure, they're in a downtrend, and I'm not interested. All right, guys, take care, and let me know if there's anything you want to see on the next video in the comments. Please like and subscribe. Take care.